So this morning we're going to talk about coffee. Normally when people ask me about coffee, my first response is, I'd rather drink it than trade it. It trades on a different exchange than most commodities. Most commodities trade on the CME group, the Chicago Mercantile Exchange Group. Coffee, along with cocoa, sugar, orange juice, the softs, they trade on the ICE exchange. The ICE exchange is quite a bit less convenient for retail traders to trade because price data is expensive. They're a little less liquid. It takes just a little more experience and knowledge to navigate the softs markets, in my opinion. That said, I think there might be some opportunities in coffee. We're trading near a decade low in coffee, which, as a contrarian, attracts me. Some setups on the chart that are pretty interesting. So this is a very long-term chart of when you're looking at coffee futures. This chart dates all the way back to 1975, and you can see that coffee prices generally tend to bottom out around 90 cents to $1 per pound. There's been a few occasions, 2 exact occasions, that we've actually seen coffee fall to 50 cents a pound, but it's relatively rare. Most of the time when coffee gets to this price, it bounces pretty hard. On some occasions, it's bounced over $2, and on other occasions, even higher than that. To put this into perspective, if you've never traded coffee futures before, 100 cents or 100 points, whatever you want to call it, 100 cents in coffee is equivalent to $37,500. So if you happen to be long from 100 and you sold at 200, that's how much you'd make. Obviously, it's not that easy, but I'm just kind of giving you some perspective. Obviously, on the flip side, there's risk. So if you bought at 100 and we did trade down to 50 cents, which isn't common, but can and does happen, as we see here. It's happened twice since 1975. In fact, actually 3 times if you go all the way back to 1975. If you bought at 100 and sold at 50, that'd be a loss of $18,750. So we're talking some really big volatility in this market, which is why it's not necessarily an ideal market for everybody. Coffee's not for everybody. But we'd like to point out on a long-term perspective, historically, we're getting to prices where coffee is generally a much better buy than a sell. And by the way, if you're not willing to accept the risk of trading coffee, that's okay, but please continue to drink it. In fact, drink twice as much as you've been drinking, because we have coffee's not necessarily been going exactly as we wanted it to go in the last couple of days, but we still believe in the long-term stories, so we're not panicking yet. But any increased demand would be helpful, so thank you for that. So this is a daily chart of coffee, and you can see, hopefully you can see yesterday there's a big red bar, a big down bar there. In our opinion, that really had nothing to do with fundamentals or people selling because they think coffee is going lower. It really had a lot more to do, in our opinion, with stop running, the week longs getting squeezed out, that sort of thing. Also, the March contract was dropping off the board. When the March contract goes into expiration, in fact, when any contract goes into expiration, there's a tendency for the market to make a big extension in the direction of the trend, and then a lot of times it just kind of turns over the next day or two. So we think that's what's happening. We think that yesterday's selling was just panic and emotion-based and necessity-based, not necessarily opinion-based. So with that said, yesterday's selling did put the RSI near 30, which we don't see often. But on the last occasion we saw 30, coffee found some sort of a bottom. And if you're familiar with the RSI index, the RSI indicator, it's the relative strength index. And when it gets to 30, it doesn't guarantee a reversal by any means, but it shows that the market's probably a little oversold, and at some point there's a good probability that the selling will dry out because everybody that's bearish or everybody that needs to get out has already sold and taken action. So quite frankly, there's just nobody left to sell at some point. Where exactly that point is, we never know until after the fact. We're hoping that yesterday was that point. On a daily chart, we can see that the market appears to be finding some sort of buying interest. We're looking for just a normal ebb and flow bounce. Even if we're wrong and coffee is going to continue lower into the low 90s or lower, we should at least see some sort of technical bounce towards like 103, 104 area. That would be the trend line that we're looking at here. If we break through that, we think we could get something pretty substantial. We wouldn't be surprised to see 112, 110, which is where we saw a few weeks ago in coffee. We think a return to that is relatively likely. And if that level breaks, we wouldn't be shocked to see coffee run all the way back up into the 120s. Now, we'll just have to wait and see how things turn out over the next couple of weeks, but we want to point out that these are the possibilities. Sometimes it seems absolutely impossible for a market to do that when it looks the worst, like it does now, but more often than not, when a market looks its worst is actually when it's the best time to be a bull. So we are DeCarli Trading. We are a futures and options brokerage service in Las Vegas, Nevada. If you're looking to trade commodities, we would love to teach you. We have a lot of information on our website, free videos, free articles, all those types of things. So if you're interested in learning before you get involved, check us out. It's DeCarliTrading.com. And obviously, if you do decide to trade commodities, we'd love to have you as a client. Again, we are a brokerage service. That's how we make our living. We've also written a couple of books. The most recent book is Higher Probability Commodity Trading. You can find it at any major book outlet, but it's cheapest on Amazon, of course. So check it out. If there's anything we can do for you, let us know. DeCarli Trading.